Welcome to the Earnings Whisperers. My name is Benjamin Poole. Normally, I have Dr. B with me because he is in the service with me, and he is the one who also helps you provide the updates or helps us provide the updates for what is going on in the earnings world. This week, we had some exciting news. We had Goldman Sachs, we had BlackRock, we had Bank of America, we had Interactive Brokers, Johnson and Johnson, Alcoa, and let's not forget about Netflix and a couple other ASML. Actually, ASML is what started a huge downtrend in the semiconductors. Okay, um, so Netflix, and then we had American Express. So we've got a lot of earnings to cover. I want to show you what we had in the service, in the earnings trader, and just really give you an idea of what this is all about, and then how you could potentially trade earnings as well. So that way you don't necessarily have to be in the service. If you set up your own charts and stuff like that, you can understand like exactly how we do it, and you can do it too. Okay, so I'm going to go ahead and share my charts with you guys. Here they are. Let me try that again. What happened there? So let me share my charts with you. Here I go. The first thing we're going to do is we're going to take a look at Bank of America. So Bank of America wasn't the first earnings that come out, but this is the one that had really heavy volatile. We're going to start with Bank of America. BAC is one that had a lot of implied volatility, about 5%. What happened for their earnings trader is sometimes like you can get overextensions in the markets. And if you don't have a lot of volatility, then they don't reach those overextensions. And I'll show you what I mean when we go over Domino's Pizza with the overextensions. So I played it a little conservative in the earnings trader. Bank of America, we had at $47.32 on the upside. And then we had a couple ad levels at 50.20, 50.12 and 52.18. So as you can see, that is a pretty big spread. And if you take the close of the previous candle and extend this up, this was about an 8% move. Bank of America typically doesn't move quite that much. Actually, here was the close. So let me go ahead and try that again. This was an 11 or 12% move. So one of the things that I did was I tried to factor in algorithm trading to an extreme. So that didn't happen on Bank of America. But what we're going to do is see what happened on earnings. It had about a 5% bounce. So here was the close of the day before. And then earnings was in the morning. You take this, and it got up about 5.5% before actually getting a pullback. So we were a little too conservative on this. We went 12 to 14% when the actual move was about 5%. So we learned from that. There were some additional levels that we had up there. Bank of America wasn't at all-time highs, and so we had some additional resistance levels, which is one of the reasons that I put it up so high. It ended up going up to right around the 44, 48 level. My level was a little bit higher, but that's okay. Again, this is one of our first ones that we did this week. Just kind of feeling out the week to see how it goes. And the next one that I have is United Health. We had earnings, United Health, on the 16th pre-market. So here were the levels that I had. It was at 570.22, 575.70, and then 580.70 as well. Okay, so I have these levels in here. This is what happened in earnings. You had this big rise on earnings with the initial flush out, but then you just continue to rally. Look at the it wasn't a big earnings move. However, you got a big move after the earnings on United Health. It continued to rally up, and look at my first target. It hit my first target and then pulled back. Now, granted, It had earnings on the 16th. It didn't hit until the 17th. But this is how strong these levels that I give are. They're they're so that way they're multi-factored, which allows you to trade them not only in earnings, which they'll have a big pullback, but also after earnings. So it hit this first level, hit my second level, and then actually came up and tagged my third level. So 570.22, 570.570, and then 580. So this shows you that if it would have hit pre-market, look at the pullback that you got from the top. You got a 3% pullback or $15 off of the highs. And this is what we tried to set up. We tried to set up multi-factor trades so that way we have institutions at specific levels. So that way it really has a big pullback when the pullbacks happen, if it extends. IBKR, I had some levels on IBKR that didn't hit. IBKR was at all-time highs a couple days ago. So I wasn't really anticipating a move up on IBKR. I wasn't going to say that it was going to fall into earnings, but it had a better probability, I will say, to fall than it did going all-time highs or retesting all-time highs. So here were my levels pre-market. It didn't hit. So this is IBKR is one that we wouldn't have traded, and we didn't trade. It never got to our levels. So maybe next time, with the implied volatility, we'll go a little bit more conservative. The earnings weren't great, but they weren't terrible. It seemed as if the market had priced that in, and that's fine. We just move on to the next one. Okay, ASML. ASML had earnings right at the open at 1 o'clock in the morning. So I said what right at the open, but I meant right at 1 o'clock. All right. Pre-market is the best time to trade earnings if it's a pre-market earnings report. However, based on the fact that it traded at 1 a.m., there's not a lot we can do. We need the increased volatility. We need the increased price action. That didn't happen on ASML. However, these were the levels I gave: 150, 924, and 899. Okay, so these, if we go to the chart of ASML, this was the close before the open. So it's 1066. So as you can see, that was over $100 away. That happens. It moves like that. So here's what happened with the first level. Pre-market, it didn't hit there. That's okay because it wasn't any volatility. But at the market open, it flushed right down to that key level of 950.21. Even though this is technically not a win for the earnings trader, this is a win if you were able to identify those levels ahead of time, put them in your charts, and then trade them. So it comes down here, it had flushed. Let's see what the flush was. It was $116. $116 bounce means you should be getting about a $16 bounce to the upside. Let's see what it gave us. Oh, go ahead and remove that. Come on now. All right, here we go. Look at that. $16 bounce. So had you just been in the service or had you identified those levels ahead of time, even though you didn't get in during the earnings, the pre-market, these were specific levels that allowed for a bounce. All right. So then what happened? Then the next day, so $116, that's what it dropped the first day. And so you can expect a $16 bounce. The second day, it came up, and then look at the second level, right? It came down from the open, $32. It pierced that second level. This is how strong these levels are. And you got, so a $30 bounce for the service would be a $3 bounce. Here is the bounce it would have given you right here. A $7 bounce. Even though you would have only expected a $3 bounce off of this level, because it was a $30 drop, you would have could have gotten $6. And now we're into the third level right now. So this is the third day. So I want you guys to know that these levels have such good support or resistance that they can be traded even if it's not necessarily on the earnings day. All right, another one that I wanted to point out was UAL. Okay, UAL was implied volatility, I think was about 4.5 to 5. It never got to our level. It wasn't very volatile. Here were the highs, here were the lows going into earnings or on earnings after the report. So here's the chart of UAL. UAL, I thought was going to be a big market mover. I mean, a big mover because we had a DAL the other day, but it only dropped 6%. I was being a little bit more conservative. So if you go to the daily chart on UAL, it got down to essentially the double bottom here because it had already had a big move up 6%. I was actually expecting it to flush this level, and then our first aggressive level would have been $42.90. And then a first buy level wasn't too much lower than this. We're still doing about a 10%. 10% on UAL isn't a huge drop. As you can see, when UAL decides to run, it can go up or down 16, 17%. So even though I was being a little bit more conservative, this is a chart that we weren't able to play, but that's okay. Discover Financial Services, we had a couple levels. It was at all-time highs already. So I didn't have any shortable levels. One shortable level I could have had was 147.59, but I actually anticipated this going down. And so our first level would have been right around 130 area. No, that's the, sorry, our first level would have been right around 120. Anyway, DFS, it wasn't one that moved very much. So it wasn't something that we were going to play. TSM had earnings at 2 a.m. So this wasn't a stock that we could play because, again, we just need the volatility. ASML, it started the flush out in the semiconductors. TSM kind of gave it a rebound at earnings. It popped and sold off a little bit because they actually beat on earnings. Here, let's go to the charts, or I mean the graph. So they beat, but again, it ended up selling off throughout the day. It still hasn't hit the levels that we had set up. It's fine. It's going to do what it's doing. Domino's Pizza. All right. So Domino's Pizza. I had some really far away levels. The last level we had was about 11%. Domino's Pizza, it was supposed to have less volatility than usual, about 7.5 to 8%. It actually flushed through my levels. Okay. So when this happens, when you set up your levels ahead of time, you expect a certain implied volatility. You have these gap fills and ultimately additional factors for your trades. You have additional factors for these trades. Like, for example, you had that trend line. You have this price action right in here that this is going to be extremely good support, but it didn't really matter. It flushed through it, even with the gap fill. One thing I will note is we need price action and price velocity. When you go to the intraday, we'll go to the 10-minute. There is no price action. As soon as earnings came out, look at the volume. There is no volume. You can't trade this. This isn't even electronic volume. There is just nothing going on. 3,700 shares traded in that 10 minutes. So what you have to do is you actually have to wait for volume to pick up. And actually, it didn't start picking up until 9:30 in the morning. The interesting thing is, had you bought in, even if you would have gotten in at this 433 level, which was our first level, 427.55, which was our second level, and 421.67, your average would have been right in the middle, and you could have still come out and made money. Most likely, you could have gotten filled here, and then you would have gotten out at a break even. I mean, for a profit. But look at the moves. Look at the moves up on this. This is why we try to put our levels far away, because this was a substantial drop. So this was the close, and it got down as much as 15%. The implied volatility was about 7.5. So we are looking for these big moves, but we also need the price, the volume for the stock. And it's a lighter stock, and so it's no surprise that there wasn't initially. Netflix, I was expecting a drop It has since dropped since the earnings report. It got as low as $600 pre-market, which looks like it was a 618. Based on Domino's Pizza and the fact that last earnings it had positive results, I was expecting it have to be blow away earnings for it to sustain this level. It looks as if, at least during the earnings, we were trading live. This is exactly what the market wanted. So it got down, got all the way down. So this is the earnings day. It got down to 600, came back up, and then was basically chopping around exactly at the place that it started. So it wasn't an opportunity for us. It didn't get down far enough for us to trade. It was a 6% move. It was good support, but it's still, the implied volatility was greater than the drop on it. So had it missed earnings, it would have flushed that level and gone down 12, 15%. And that's where we capitalize on the trades. Last and not least is AXP. We put this out. I gave this chart to the members. There are two parallel channels on AXP, and I have this on the daily chart to show you guys. Parallel channels are incredibly important, and they're great identifiers of potential levels to either buy or short. It gives you an idea of where price action is. So this was a great opportunity for us to short AXP. When stocks are at their all-time highs, it's hard for me to short a stock because it has unlimited potential. This had a breakdown of this upslipping channel. It retraced intraday, and I want to show you something. The retracement level. Oh, that's regular. Let's go to extended trading hours. Look at this. So this is that trend line. I mean, this is that upsloping trend line that had broken below and then retraced back to. So this would have been a great opportunity to short AXP going into earnings. We didn't do that. This was another lesson for us. If it is all-time highs and I have multiple factors, we can put this out for a trade. And so just know that when stocks are at their all-time highs, find some resistance levels. And if you've got the price volatility and the price action, then you can short this as well. So I hope you guys enjoyed this episode of the Earnings Whisperers. And please check out our service, the Earnings Trader. Our levels are so good that you can trade them even after the earnings are over. So, all right, that's it. That's all I have for you guys today. Take care.